We're already getting some headlines with Janet Yellen in them talking about how there needs to be more crypto regulation because of what happened with FTX. According to a report from Bloomberg on Saturday, Janet Yellen, who is now the head of the Treasury Department, is looking at some ways that there can be regulations for exchanges like FTX, noting that if they had been part of TradFi system, there possibly could have been some contagion for TradFi world and for the US government. What they're really looking at is, hey, we don't want anything from crypto's volatility to impact the larger market. This is pretty expected, but also deeply frustrating, especially for a lot of people out there who have been lobbying over this last cycle, and for everybody who's still standing, for the Coinbases, the Krakens, the Binances of the world. Now they have to deal with the US government, which is only going to put more pressure on top of this already tenuous discussion. Let's move over to Wendy for your take.
All right, I have a lot to say about this because this is immensely frustrating. We have somebody like Janet Yellen who is basically in charge of the money supply in the United States, and we're currently seeing record high inflation rates and money printing like crazy. So we have somebody that has done a disservice to the American people coming out and saying, we need more regulation. Well, guess what? The current regulation we had didn't stop the Fed from printing money. It didn't stop inflation. It didn't stop any of the problems we're seeing with the current traditional financial sector. In addition to that, what was the SEC and the CFTC doing? Mostly this SEC. It's coming out, and there was reports that were indicating that folks from FTX met with the SEC. I believe it was back in March of 2022. Why wasn't the SEC regulating any of this? There's also been reports that people affiliated with FTX had family members that were affiliated with government officials. Therefore, that is problematic behavior. So, could regulators have actually stopped this, especially if they would have integrated Hester Pierce's crypto law? Possibly, but at the same time, they didn't. So calling for more regulations at a time like this isn't going to stop what happened. They need to do a little bit better and stop fear mongering, in my opinion.
I want to go in on this sort of idea of contagion, right? About how crypto is still fairly isolated from the traditional financial system. I guess the question is whether that's a good or bad thing, right? In the traditional financial system, governmental institutions would be able to backstop some of these failing quote unquote banks, right? Here in crypto, there's no such lifeline that could be extended in a time of crisis. So I guess like my general feeling is that it's good that there wasn't contagion over into the regular financial world, but that certainly comes with its own trade-offs, right? There is no government support. There are no government bailouts. We're not going to face something that we saw in 2008 where these banks were bailed out, right? And there's no one coming to save FTX from the government public sector to make sure that users of FTX, the small fish, the small fry who are now stuck with funds that are probably not going to be reached for years and years, there's no one to come help them out. There's no FDIC here. Now, I think that is in keeping with what crypto is trying to establish. And I don't think many people would say, oh, we need FDIC protection in the crypto space. It's sort of antithetical to what crypto is trying to build. But it certainly, in times of crisis like this, becomes evident as a set of trade-offs that are being made, right? Okay, it's its own little financial island. It's firewalled from the traditional financial system. The spillover effect is not huge. But on the flip side is no one is coming to save you when you find yourselves in dire straits with funds stuck on FTX or any projects that are ultimately going to go under as well. So I don't know. I guess that's the open question for me. Like, is it good that it's firewalled from the traditional financial system to date, or is that a flaw rather than a feature? I guess I'll toss that to Jen for her initial thoughts.
Yeah, no, I agree with you, Zach, and also Wendy with what you said. When she said it shows weakness of the entire sector, I just really don't think that's true. But I think we could have all expected statements like this to come out of FTX's downfall. I think that regulation is going to move quicker, unfortunately, but that's just kind of where we are. I just don't think anything good can come out of this. Anyone who understands the space knows it doesn't show weakness of the entire sector. To what I said in the last segment, it shows weakness of this particular business and the people who were leading this particular business. And I know we're still getting more information on what went wrong behind the scenes, but there are lots of laws already in place to address some of the illegal things that are being alleged that happened behind the scenes. I don't think we need more regulation. If these people were really bad actors, there are already regulations that can bring them to justice. And so I think we can expect regulators to see this. Unfortunately, I think we can see more regulation to come. But the good part here is there are still options. We don't need to partake in these centralized systems if we really want to partake in crypto. And maybe our focus is misguided when we think about bringing the mainstream audience into the space really quickly. I know I said that on the show last week. Maybe we need to slow down. Maybe this whole thing is telling us we need to slow down, and our focus should be on just getting these systems right and not bringing in the next billion users as fast as we can. But Will, I'll kick it back to you to wrap us up.
Yeah, I think you guys all made a few good points there. One thing I want to zero in on is like, what does regulation look like for the space after all this happens? And I've seen a lot of Twitter threads, a lot of people talking about this, all the crypto lawyers popping up as is their discussion. What happens here with FTX being an offshore exchange that was more or less breaking U.S. securities laws, but not recumbent to U.S. securities laws? It's really hard to say, right? Like, is there anything in the books that would have prevented FTX from doing what it's going to do? It didn't operate in the U.S., and most of the users should not have been U.S. users because they tried to disallow them. You had to use a VPN, or you had to go and use FTX US. So what can Janet Yellen et al. Do to figure this out? I don't know if there's anything that you can do. That being said, we also see that FTX US is also involved in this Chapter 11 bankruptcy, right? And so there seemed to be some commingling of funds that was inappropriate. And maybe there's some laws or due diligence that could come out of this event from those two exchanges working together closer than people expected. I mean, Binance still has Binance US, its own exchange, its own arm. And there's a few other teams that do a similar thing, right? They operate in the US and they operate internationally, but they have some sort of dividing wall between the two things. I don't know if that dividing wall is in practice and reality. We'll have to find out as more documentation comes out for a lot of these firms. It's definitely something to watch. But Zach, I'll kick it over to you. Let's go to break.
We got a debate one time, FDIC protection or CZ protection. Which would you rather have in a crisis?